Okay, my first citation from Ivan Biaggi is: when your losses can strip you from your well-being, you know you've matured as a trader. So he's telling you that in order to be a mature trader, losses can't affect you. And that's extremely important, because most people, when I see them on YouTube or even if I remember me at my beginning of trading, people are very, very impulsive, very emotional about their trades. And if the market goes a little in their favor, they are extremely happy, euphoric. And when it goes against them, they get extremely depressed and sad and don't know what to do, freeze. So when losses don't affect you, you have made a lot of progress. And just look at other YouTubers and what they put out as informations. It's always a huge bull run or extreme dump, and you see their faces extremely excited, happy, laughing, euphoric, or extremely sad. And that's exactly what you cannot do if you want to be a consistent, profitable trader. You must be neutral about your trades. For right now, as I'm speaking, I have a dozen of trades on different actives, like gold, Tesla, altcoins, and Bitcoin. At least a dozen of trades I have. I feel completely indifferent about the charts. I look at them, I look at my position. If it is positive or negative, it doesn't change anything to me. What counts is my trading strategy. What counts is my entry point. What counts is my exit point. What counts is me managing the risks, but not at all if I make money or if I lose money. I'm totally indifferent right now about that. A couple of years ago, when I was starting trading, I had a little trick. Every time I looked at the chart, before I looked at the chart, I told myself your position was liquidated. Every time. Even if the last time I looked at it, it was profitable, I told myself your position was liquidated. I did that just to start being able to manage failure, to manage losing money. Right now I don't do that anymore because it's not necessary anymore. I feel indifferent to price action. The only thing that really counts for me is my trading strategy, and if I follow it truthfully. If I respect my rules, that counts to me. And if my rules are up to the task, that's important to me. But the result is secondary. Making money or losing money is not what is really important to me. It is, of course, that's why I'm in the game. But I'm emotionally detached from it. And that's a state of mind you must acquire if you want to be in any way, if you want to have the slightest chance of success. As long as that is not possible, you will always lose money. Trading is a game of probabilities. That means that not all your trades will be profitable. Right now I'm in a fortunate position. A lot of my trades since a couple of months are all profitable. I haven't been liquidated or even stopped out for a very, very, very long time. And I must be a little cautious about that because I can't get too confident. And at the same time, I must be able to take enough risk so that the game is still interesting to me. I mean, from a financial point of view. So, because I might be missing out of opportunities by telling myself you get overconfident. And on the other hand, I might get too confident and make a mistake that afterwards will affect me will affect my bottom line hardly. So I must trading is 50% psychology. 50, I call it psychology. Psychology to me is the same thing. Freud and the stuff you hear from our psychologs or psychiatrists is just a bad version of philosophy, a really bad version of philosophy. And today you must be able. So the bad version of so 50% is psychology, and my psychology is stoicism, and it helps me a lot because it tells me how to look at money, how to look at people. It's a school of thought. It's a school where you mature as a human being, and it is at least 50% of the game. Then there is 30% of the game, which is risk management. So what's your entry point, what's your exit point, how do you manage risk, how big are your positions, why, etc. For how long do you hold a position? All that is risk management. And then there's 20%. The last 20% is technique. For the technique, I use Elliott wave. So I made a couple of videos in the past about chart analysis, and maybe I'll get back to it, but I don't find it so interesting actually to look at charts, because what is important is because it's just 20% of the game. And yes, you have to be very good at Elliott wave. I will choose Elliott wave about any other technique because it's the most close to what really happens in the market. It's the most close to market behavior. But you can choose what technique you like. Actually, the theory means that you can choose what technique you like. I couldn't do anything else than Elliott wave because everything else is to me a joke. But you can use any technique you like. But that, even if you are extremely good at technique, it's only 20%. You will not succeed even if you're the best Elliott wave trader. If you can't do proper risk management, and if psychology, what I mean is philosophy, you're not up to the task. It's a very complicated game, and it's not something for a child. It's not something for somebody who can't manage his emotions. Okay, I think that was quite nice for today. I hope you enjoyed the scenery, and I'll get back to you very soon. Thank you for watching, and see you. And I'll let you enjoy the scenery one last time before I stop the video. Okay, I enjoyed talking to you about trading, and I'm looking forward to do the same tomorrow. So stay tuned, and don't forget to subscribe. I'd like if my channel grows a little and if I'm not talking only to myself. Bye bye.